In this lesson, you will learn how to properly gather and price your baseline positions in TradeLog. This procedure only needs to be done once for first-time users of the software. If you held positions open from the previous tax year that carried through to the current tax year, and you are using TradeLog for the first time, you must manually enter each open position into the software prior to importing your trades for the current tax year. Manually entering these trades, 1. Ensures proper profit-loss calculation and trade matching throughout the tax year. 2. Minimizes common errors in your brokerage account's data file. 3. Allows TradeLog to automatically carry any open positions in the current tax year into the next tax year. To begin, locate your December statement from the previous tax year. For example, if you are filing your 2011 taxes, you will need your 2010 December statement. You may need to download the statement from your broker's website if you did not receive a standard paper copy via mail. Note, this is not a year-end profit-loss summary sheet or a 1099 form. It is a broker-provided monthly report with each buy and sell transaction for that month. There are two main sections of this report that you will need to analyze. Once you understand these two sections, you can properly gather and price your baseline positions. The first section is your holdings. Most brokers list this information, if any, before the actual trade history for the month. It is only a summary of what trades were settled in your account at the end of the month. You may not see the word holdings. However, look for words that describe opening trades or instruments. For example, you may see the word stocks, options, equities, securities, positions, or a combination of these words. The second section contains unsettled or pending trades. You will find this information after the actual trade history for the month. These trades were ordered and confirmed before the end of the month, but did not settle in your broker's system until the following month, or in this case, the following year. There are three main ways pending trades may change the results of your holdings. This is vice versa for short sales. 1. A pending sell may match to a settled buy in the same security, in turn closing the trade or filling an order. 2. A pending sell may only partially close shares of a settled buy in the same security. Or 3. A pending buy will always create or add to an open position. Notice the examples that follow. 300 shares of Google are being held at the end of the year. Yet there is a pending sell for 300 shares to close out the trade. Therefore, Google is not carried over in the current tax year of 2011 and does not have to be entered in TradeLog. All shares have been zeroed out. In the next example, 100 shares of Microsoft are being held at year-end. However, 50 shares are being sold in the unsettled trades list. Therefore, only 50 shares of Microsoft will be carried into the current tax year. So only 50 shares of Microsoft will be entered in TradeLog. Notice the direction is not to simply manually enter the pending sales along with the original holdings. Though this will properly adjust your shares or contracts, it will also increase your gross proceeds and distort your P&L. Now let's consider some option trades. 10 contracts of REM were bought earlier in the month. there is a pending buy of 5 contracts in the same option. So 15 contracts total of REM are carried over into the current tax year. Note this does not mean that we combine both REM transactions in one trade and average the price between the two. This is the reason why most broker P&L statements are inaccurate. Rather, we want to separate these two lots and create 2 entries. We will discuss this later in the tutorial. As a reminder, pending trades can create new holdings in your account. For example, 5 contracts of EEM was shorted in a pending trade. With no current holdings in this written option, these 5 contracts will be carried forward into 2011. Remember to carefully consider each buy and sell in the pending section. Do not simply rely on the holdings that your broker provides, as this list is often incomplete. Another factor in determining baseline positions is pricing. In many cases, brokers do not provide the original price a security was bought or sold short at due to the implementation of averaging the cost basis of partial fills. This can make it difficult for traders to provide a proper profit loss to the IRS. The solution then is to find the original price for the securities you acquired. This is easier for active or day traders than it is for investors, as some trades may be held over many months or years. You may need to do some extra research in order to find the correct pricing. For example, INTC was purchased in 2000. By doing research, you can find the original price for long or short-term securities and ensure a proper P&L. The original price for INTC is $32.75. This is the price we would enter into TradeLog. Remember that prices can change with different lots that are filled, so you need to specify this in TradeLog. One security may have several entries. Consider WM. There are 200 shares being held. After doing research, the original price for 100 shares on December 9, 2010 was $35.25. Then again, on December 23, 2010, WM was bought 2 more times. On this transaction, a lot of 30 shares were bought at $36.32 and another lot of 70 at $36.40. So in TradeLog, you would have to enter 3 separate entries for these 3 fills of the WM trade. One lot of 100 at $35.25, a lot of 30 at $36.32, and a lot of 70 at $36.40. Also, as discussed earlier, 15 contracts are being held in the REM February call option in a lot of 10 and a separate lot of 5 contracts. Again, 2 entries would be entered in TradeLog. The 10 contracts were bought at 19.7 and the 5 contracts at 19.1. Please follow these directions closely with stocks, options, futures, and their counterparts. There are 2 exceptions to pricing that need to be addressed. Sometimes the instrument that you are trading or the election that you choose can dictate the pricing needed to properly file your taxes. Mutual funds, for example, are marked or priced to the market on a daily basis. Therefore, in some cases, partial filled prices can be averaged together for a new unit price. Please speak to your CPA or tax advisor on the best course of action as circumstances differ. Also, traders who have elected MTM and at least in the second year of this election will use the market prices that their broker supplies for their baseline positions. This is due to the fact that the election requires carryover positions to be opened at the market price in the following tax year. If you have any questions or need assistance gathering baseline positions, please contact your CPA or brokerage firm for assistance. This is a one-time procedure which can be easily completed with the right guidance. Let's review gathering and pricing open positions. 1. Locate your December statement of the previous tax year. For example, if you are filing your 2011 taxes, you need your December 31st, 2010 statement. 2. Carefully consider both holdings and pending unsettled trade sections. Do not simply enter in both sections in TradeLog. 3. Review how your pending trades affect your holdings at the end of the month. Make the necessary adjustments to identify the proper shares or contract count in each open security. 4. Once open positions are established, find the original prices of the securities held. 5. Make sure to specify the individual price for multiple lots in the same securities. You will list each lot as a separate entry when entering this data in TradeLog. Once you have gathered and priced your open positions, you can enter them in TradeLog. Please review the lesson on manually entering trades to see the details on entering each trade and security type. Please continue on to the next lesson.